Despite some wild bouts of volatility this year, Bitcoin remains among the best performing assets, having gained 60% since January 1st. The tailwinds propelling Bitcoin remain a confusing mix of trading in correlation with risk assets, like the Nasdaq, against trading with dollar hedge safety assets, like gold, and it seems to jump back and forth between the two camps. Now, there's another element to the story that's been consistent for the last couple of years, and that is broad adoption. Now, broad adoption was always thought to be a critical component of validity to the coin. Last year, institutional adoption was the theme as BlackRock increased its footprint in the space. Eventually, the spot Bitcoin ETF was launched, which allowed greater access to investors of all sizes and sophistications. There's also been explosive growth in CME futures contracts as Bitcoin holders use the products to hedge existing positions or to express shorter-term directional bias. What's been even more interesting, and could be another illustration of the broad demand for Bitcoin exposure, and that's the massive demand for the reduced size CME contracts. So much demand that CME has now launched Bitcoin Friday futures, which are 1/50th of a full Bitcoin and 1/10th of the wildly popular micro contract. Now, as time passes, it seems that market demand is pushing institutions to fill in all the holes in any participant's barriers to entry.